In this video, we're breaking down something that nobody really talks about until it's too late. How much does home insurance actually cost? Because here's the thing. Some people are paying $80 a month. Others are paying $500. And most of us, we have no clue what's normal. What's up, everyone? My name's Eric Hunsaker, and today I'm pulling back the curtain on home insurance pricing. We'll cover the real numbers, what drives them up or down, and how you can avoid overpaying, even if you've had the same policy for years. Let's get into it. The most important factor, location. Now, this one can't be overstated. Where you live has a massive impact on your insurance rates. Take Oklahoma and Hawaii, for example. In Oklahoma, the average homeowner pays more than $6,200 a year. In Hawaii, just over $600. That's a tenfold difference, and it's not a mistake. It's about risk. Oklahoma gets hammered by tornadoes. Florida faces hurricanes. California deals with wildfires and earthquakes. The more likely it is that your home might be damaged by nature, the more expensive it's going to be to insure. It even gets more specific than that. Your zip code, the crime rate in your neighborhood, and how far you are from the nearest fire station all get factored into your rate. If it's hard for emergency services to reach you quickly, then your risk goes up, and so does your premium. What kind of home you have also matters. Now, beyond location, the physical characteristics of your house play a big role in pricing. For starters, bigger homes usually cost more to insure. It's simple math. More square footage means more materials, more labor, and a bigger potential bill if something goes wrong. But it's not just size. Older homes can cost more to insure than newer ones, even if they're the same size. Why? Because older homes often have outdated wiring, aging plumbing, or roofs that need replacing. All of that adds to the potential repair cost. And then there's the structure itself. A concrete block house in Florida, for example, might be cheaper to insure than a wood-framed house in the same area. That's because it's less likely to go up in flames or get torn apart by wind. Your roof matters too. A new roof made of asphalt shingles can actually lower your rate. But a flat roof or an older one made from more flammable materials, that could bump things up. Coverage amounts. How much protection you actually need. When you're buying home insurance, you're really buying coverage. The more protection you want, the more it's going to cost. If your house is worth $200,000, you're probably not going to need $500,000 in dwelling coverage. But if you've got a bigger house or one with expensive finishes and features, you might need more than $300,000 in coverage. Here's how it typically plays out. $200,000 in coverage, about $1,500 to $1,600 per year. $300,000, around $2,100 per year. $400,000, roughly $2,600, and $500,000 and up, about $3,200 or more. But this isn't a one-size-fits-all deal. Your mortgage lender may require a minimum level of coverage, and you also want to think about the cost to rebuild your home today, not what you paid for it years ago. Credit scores, claim history, and other stuff. Here's where it starts to feel a little personal. In most states, insurance companies can look at your credit score, and if it's not great, your rates can go up, sometimes by 70% or more. It might not feel fair, but insurers say there's a correlation between credit score and the likelihood of filing a claim. So if you've got excellent credit, you'll probably get better pricing. If not, you might get dinged. Your claim history is another big one. If you filed multiple claims in recent years, especially big ones, your premium is going to reflect that. It's kind of like car insurance. The more you use it, the more they'll charge you for it. Some other sneaky factors: do you have a dog? Some breeds can raise liability concerns. Do you run a business out of your home? Got a trampoline or a swimming pool? Yep, those count as attractive nuisances. These details might not seem like a big deal, but they all affect how much risk an insurance company thinks they're taking on. Why rates are rising even if nothing's changed. Even if you haven't filed a claim and your home is in perfect shape, your premiums might still go up. And it's not just you. Rates have been rising nationwide, sometimes by 10% or more per year. The reasons? A mix of inflation, supply chain issues, and a spike in natural disasters. After the pandemic, the cost of building materials surged. Labor got more expensive, and insurers who pay out to rebuild homes had to adjust. At the same time, the US has seen more billion-dollar disasters than ever before. Tornadoes, floods, wildfires, they're hitting more often and doing more damage. Insurance companies have had to pay out huge amounts, and that cost is now baked into everyone's premiums. Some insurers have even pulled out of states like Florida or California entirely because the risk is just too high. That means fewer providers, less competition, and higher rates for everyone left. What you can do to lower your costs. All right, now the good part. So what can you actually do to save money on your home insurance? First is shop around. This is the easiest way to save. Don't just auto-renew your policy every year. Get quotes from at least 3 different providers. Prices vary more than most people think. If you want a shortcut, go ahead and check out the free home insurance survey tool that we have linked down in the description below. It gives you a personalized quote based on your zip code, home details, and more. There's no pressure, just some great information. When you click on the link down in the description, it'll bring you to this page right here. We can go ahead and type in your zip code, when your house was built, do you have an in-ground pool, what's your household income, how many cars do you have, and have you or a family member served in the military. Second, look into raising your deductible. If you bump it from $1,000 to $2,500, you might save 10 to 15% annually. Just make sure that you've got money set aside if you need it. Third, bundle your policies. If you're already paying for car insurance, try getting both policies through the same company. That alone can knock off another 10 to 25% off your home insurance premium. You can also score discounts by going paperless, paying your policy in full instead of monthly, installing security systems, smoke alarms, or storm storm-proof windows. Going a few years without filing any claims. If you're up for it, upgrading your home can help too. A new roof, better electrical systems, or impact-resistant windows can all reduce risk, and your insurer will reward that. And finally, don't over-insure. Make sure your coverage matches what you actually need, not too little and not too much. What you think it costs versus what it actually costs. So let's be honest, nobody dreams about buying home insurance. It's not exactly exciting, but when something goes wrong, it suddenly becomes the most important thing in the world. And then comes the sticker shock. Most people don't even know what a normal price is. Some folks are paying $80 a month and others are paying over $500. So what gives? The truth is that the average cost of home insurance in the US is somewhere between $2,100 and $2,300 per year. That breaks down to around $175 to $195 per month. But averages only tell part of the story. So depending on where you live, how old your house is, what your credit score looks like, and even what kind of roof you have, your prices can swing wildly in either direction. So home insurance is one of those things that doesn't matter until it really does. And by then it's too late to shop around or adjust your coverage. So it's worth doing a little homework now. Understand what's driving your cost. Compare quotes. Ask your provider questions. Look for ways to improve your home safety. And make sure you're not paying more than you need to. If you want a quick way to get a sense of what's normal in your area, try the home insurance survey tool that we have linked down in the description below. It's totally free and it might just save you a few $100 a year. If you want to see which insurance option is best for your situation, we'll leave our affiliate links below to surveys so you can take them and find out for yourself. These are affiliate links, so we earn a small commission when you use them at no extra cost to you. Your support through these links helps keep our channel going and allows us to continue to create free content just like this. So we truly appreciate it if you do decide to use them. But other than that, thank you so much for watching, and we'll see you here in the next video.